Today, look, a lot's happened in the world with inflation, with recession, and here's the interesting thing. We already know that most businesses fail, as upwards of 90%. But here's the crazy thing. The number one and two reasons businesses fail is one, they just don't have the cash flow. They have cash flow issues. They don't have the money they need to survive. And number two is that owners make mistakes and don't have the money they need when they're unprepared to carry them through. So what's crazy is that the two biggest reasons that we see businesses not make it are both completely controllable when we can put the money you need in your hands to not just succeed, or not to be able to thrive. Let me put it that way. Not just survive, but thrive. And that's exactly what we're going to talk about today, is how you can financially be prepared for uncertainty, how you can get the money you need to navigate through everything that's changing right now. Look, we all wish money was a sure thing, but let's face it, it's not. Anything can happen, right? And we've seen that in two cases in my time as an entrepreneur. We saw it in 2008 with the mortgage crisis, came out of the blue, knocked a lot of businesses completely off center, completely terminated some industries altogether. And then we see COVID coming in doing exactly the same thing. You could be the best restaurant owner in the world, but you can't control it when government or outside forces shut you down and says you can't operate for 6 months, a year, or longer. So these are two real examples of uncertainty and things that are out of our control as entrepreneurs, but things that we need to account for, we need to be prepared for. The unexpected is just around the corner. And this time we know it's happening. We know it's happening. Like, all the financial authorities that I track are saying the same thing. We have a greater probability of recession next year than us not having a recession. We're already seeing record high inflation that's beyond anything we've seen in 40 plus years, right? Supply chains are slow. We already have all these problems, and everything's expected to get worse into next year, right? So we don't want to be able to be surprised by this. We need to be able to contend with record high inflation, right? It's gripping our country. Please pay more money. It's reducing the amount of money that our customers have to spend, right? And it's affecting almost every single industry. We've got supply chain disruptions where the cost of things like building materials are through the roof, and that slows down all of these projects that's taking place. I'll give you a real world example. This entire area that I live in is brand new. They just literally built all of this in the last 3 years. And as I walk my dogs around all this, I've got about 8 restaurants right now that are in the process of getting built out to open. But here's what's crazy. Those restaurant owners are paying rent on those locations, and those locations have been waiting for permits, building materials for over a year. Can you imagine paying rent for over a year on a location, very expensive rent, before you're even able to open? This is what happens when we see these kind of issues, including supply chain issues. And by the way, if you're just coming in, give me a shout out. Tell me where you're coming in from. Tell me your industry, and tell me, like, I would like to use your case study as an example. What are you being affected? Has inflation, has supply chain issues, have these things already started to affect you? Do you imagine they will? Give me a quick summary of how they are so we can actually tie that in to your ability to get financing as well. So customers are starting to close their wallets because, again, they fear recession is imminent. And the more of this we hear, the more we look at markets going down. And then what happens is we have basically consumer confidence gets less. People have less confidence and they spend less money. And that is what this is all about. The economy is all about consumers having confidence and wanting to spend money. When they have less confidence, they spend less money. And with all the news of inflation and recession and the war and all these other things that are taking place, customers lose confidence and they spend less money. And these are the things that we need to contend with into 2023. So we've got to tackle inflation head on. We got to know how our business buys its goods and services, and be prepared to use other means other than cash to do that, like credit lines, for example. We need to face supply chain issues before they turn from molehills into mountains. And again, I see that in industry after industry where these things are causing massive disruption. We know it's happening. We know it potentially could get worse. We need to be financially prepared, and we want to get your business ready in case recession really does come as we predict. What that means is it means people spend less money. They have less confidence. They're less willing to buy your products and services. So if you see now where it's like a double whammy, now our cost to produce our stuff is higher Okay, we got to pay employees more money because they're paying more money out because of inflation. We've got a greater cost on everything from everything that we're buying. So now our costs are going up. And at the same time, we have customers buying less of it. So this is a double whammy that we really need to make sure that we're prepared for. And again, if it gets worse, then the question is, do you have the revolving credit that you need to pull you through? So why do we even really want to make sure that we are prepared? Well, first of all, putting our head in the sand isn't going to do anything. It's not going to fix the problem. As a matter of fact, unlike the 2008 mortgage crisis or COVID, a lot of us maybe really didn't have a good way of predicting that these things were going to happen. Now, of course, hindsight's 2020, right? As we see movies like The Big Short, there were definitely people out there that had a pretty good indication that it was going to happen, that these things were going to happen. There's always a very small percentage of people that do accurately predict these things, but a lot of us weren't prepared for these things, right? So we don't, now that we know that things are probably going to happen, probably going to convert into a recession, the question is, do we really want to put our hands in the sand when this time around we have a chance to be prepared? Don't get me wrong. We want to be optimistic about the opportunity, but we want to be realistic about the economy. Okay. I'd say I call this plan for the best and, or expect the best or excuse me, hope for the best and plan for the worst. This is the way I like to do business, right? I'm very positive. I'm optimistic. I'm hoping for the best in what I'm doing, but I still have to protect my downside. I still have to prepare for the worst. I still have to be realistic about what's ahead of me. And I'll give you a simple example of this. Months ago, we went in and we locked down an SBA loan and put it in our bank. It takes about 3 weeks when you have your business credit established and things like that to get done. We don't plan on using the money for anything. Interest rates were still low and we knew they were going up. We see a change in the economy. So we're getting money and we're setting it aside. We're already stocking up on revolving credit lines. This is just common sense. We lose nothing if the recession doesn't happen, if it doesn't hit us hard, if our business doesn't slow down, it doesn't hurt us. It's not adversely affecting us to have a bunch of revolving credit available. What about you? What have you done financially? Are you locking down loans? Are you locking down credit lines? You need to be. Things are changing right now in real time. And what we're seeing is that it's harder to get money. It always happens. The more we press into a recession, your ability to get money diminishes. Okay, and I'll give you a simple example of this. Today, we're going to talk about a program called Credit Line Hybrid. When I talk about this program, I always say the same thing. You need about a 680 FICO score to get approved. We've now changed all wording on that to tell people you now need about a 700 FICO score to get approved. This is before recession even takes place. Banks tighten up. It's harder to get money. Money's more expensive with interest rates going up. So you're literally in a situation where the longer you wait, the more expensive the money is and the lesser the chance that you're actually going to be able to come in and get approved. What's the best reason? What is the best reason to get a business? Is what I can't even pronounce your name. Well, again, that's an interesting point because the reality is when we deal with economic uncertainty, when we deal with recessions, then we see a skyrocketing of business startups, which means a lot of businesses get started when the economy is down for a lot of reasons, including the fact jobs are getting cut, pay is getting reduced, hours are getting reduced, and more people get frustrated and want to take control of their own future. And look, there's a lot of reasons that you may want to own and start your own business, whether it be to solve a gigantic problem or have your own control over when you work and the faith that you have. But the bottom line is we see a lot of people when this happens and we see economic uncertainty, we see recessions imminent that actually start a lot of new businesses. And skate where the puck is going, Wayne Gretzky. Skate where the puck is going, Wayne Gretzky. I love that, Terrence. Thank you. So again, if you've been affected already by inflation, tell me what's going on. If not, then please let me know where you're coming in from. Give me a shout out, and I'll give you a shout out. Some free press right here on the stream. Let me get this actually adjusted right here. Turn on my light, make sure I know which camera I'm talking to. So preparation for uncertainty is only going to help the business, right? It's not going to hurt us to have a bunch of extra credit lines to go. But how can we prepare? Well, first of all, we want to look at our budget realistically. Where are you wasting money? So when COVID hit, we did a deep dive and we looked at a lot of our expenses and we literally laid out a 3-tier plan of what we would cut when we dropped to certain revenues. If our revenue drops to X, these are the things we cut. If it drops even further to Y, these are the things we cut. If it drops even further to Z, these are the things that we cut. It's a really good idea to be prepared. That way, you're not, oh my gosh, I can't make payroll. You know that if you're dropping out a certain number, you're not going to be able to meet your obligations and what will get cut at that point. Okay, it also gives you an opportunity to go in and renegotiate it. We renegotiated terms on our software. We got out of 2 leases. We used the uncertainty to go to the landlords and said, hey, we don't want to be in an office anymore. We want to be virtual. And I think you're going to have a serious problem right now. So let us pay you 6 months in advance cash to help you get through the uncertainty and let us out of the lease. And we were able to get out of 2 leases. We made some big moves to really lower our expenses. So where are you spending money that you don't need to be? What are your plans for the next year, the next 5 years? Look, most of us are not planning on growing less, right? We're not planning on reducing our revenue and making less profit next year. Most of us, we sit here, we're planning on next year being our best year ever. We're planning on growth, maybe record growth. But the reality is that if consumer confidence drops, if inflation really gets worse, if interest rates continue to climb, if people stop buying as much as they're buying, will that help you reach those goals? If not, there's opportunity here. Think about it. So what's interesting is that when COVID hit, our cost to get a lead on advertising dropped significantly. What happened is people stopped advertising on Google. They stopped advertising on Facebook. Everybody pulled back. And so it lowered our cost and let us spend more. And now we spent more and got even more return. And our business skyrocketed during this time. So again, what happens is you have an opportunity in any of these scenarios to actually better your business. But it takes money to do that. In order for us to increase ad spend when everybody else was pulling back, we had to have the revolving credit to do it. And we had the revolving credit lines to put that money on to be able to invest. So again, these are the kind of moves. What are your plans? Are you planning on growing? And if so, if all these things pull back, what are you doing to push forward even harder to create growth instead of actually reducing your revenue and profits like many will? Will your plan work if financial uncertainty hits? Do you have the money to make this plan work, whatever the plan actually is? So at this time, we always want to think a few steps ahead. Very unique opportunity for you and I, because unlike the pandemic, unlike the mortgage crisis, we know what's ahead here. We have a lot of indicators that are clearly telling us that we're going to be seeing even higher inflation potentially and seeing a recession. So we have the time to actually think ahead and to make sure that we're actually prepared. Okay, what the virtual office is acceptable for partner program? Well, for a virtual office, there's really 3 main sources. Alliance, DaVinci, and Regis are the best that we found. And I personally like Alliance. And the best place to go is creditsuite.com/virtual. You even get a discount if you check that link out. So that's the best one for me. Hi, what up? I appreciate you coming in, Quentin. Let's grow when we don't need it so we can fight the slow time that's coming. And that's exactly right. I love this advice. Because look, the reality is that we want to try when the time getting is good to go in as much as we can. So if the getting's not good, we're at least better financially prepared and have some cash reserves to make it through the slower times. So what are our best options? Well, first of all, we can't lose with business credit. The beautiful thing about this is no matter what the economy is doing, it helps us to have as many vendors as we can have. And when I'm talking about vendors, I'm talking about credit at almost every store you can think about. If it's computers we want, HP, Dell, and Apple offer them. If it's office supplies, we look at places like Office Depot or Quill, even getting things at, Staples and Amazon, for example. If it's office furniture, we look at places like IKEA, amongst many other solutions. If it's gas that we want, we look at places like Pilot, Flying J, and all the other gas stations that are out there. So you get the idea. There's different vendors in every industry, no matter what industry you're in. Maybe you're a real estate investor. Maybe you're in transportation. Maybe you're in financial services. Maybe you're a boutique. Maybe you're a hairdresser. The bottom line is, in order to do your business, you need things. And whatever the things are that you need, you can typically use business credit to buy. So if I walk into a hair salon, I see all these products that they're selling, right? Well, all those products can be purchased using business credit. When I have somebody come in and do new flooring in my home, well, then I can get that the flooring company can get all those supplies that they need from vendors that actually will issue them credit. If I'm having somebody come in and drywall, all the supplies needed can be used to purchase business credit. If I'm putting new computers in an office, they could be used building using, or they could be obtained using business credit. So the idea here is that we don't pay anything for business credit if we're not using it. If I get a credit limit at Amazon for 50 grand and I don't spend a dime, it doesn't cost me anything. But if I need to use the 50 grand, I have the 50 grand. And when it comes to financial uncertainty, this is the key, is that we at least need to get as much revolving credit as possible. By revolving credit, I mean credit cards and credit lines that we don't pay anything if we don't use them, but we have that available credit to use if we need it. So we want to stock up on as much business credit as we can get. It doesn't require collateral. In a lot of cases, it doesn't require a personal guarantee. There's no personal credit check. We can get it as a startup. We can get it as a nonprofit. Anybody can get it, but there's a catch. The catch is it takes some time to build. We can't just snap our fingers and build a business credit profile. It takes some school, some establishing to get our scores and profiles to a point where we can get auto financing and Visa cards and MasterCards with very high limits. So you want to start now. We know the financial certainty is up and coming. We know there's a potential recession looming. So let's start getting business credit now. So when the uncertainty hits, and when it actually what may happen happens, well, then all of a sudden we're okay. We've got hundreds of thousands of revolving credit with all these vendors, and it doesn't cost us anything to have that available credit there for us. So this is a no-brainer way for us to be prepared. And again, we can build business credit and then start putting money onto these vendors when we need to. So when COVID hit, we stopped spending any money from our bank, and all of our money that was spent was on credit lines and credit cards. We didn't know what was going to happen. So we immediately shift to obtaining debt and leaving all the cash there that we may need to navigate uncertain times. Hey, look, what if our revenue gets cut in half? We still need to meet payroll. I can't use a Staples credit card to pay payroll. So I might as well as use my credit cards for everything I can use them for and keep my cash for the things I can't use credit cards for. Now, hey, once we realized that we weren't really going to be adversely affected, actually, we were well prepared and it helped our business grow. Well, then in that case, then it makes sense to then pay off that debt before interest is even accrued. But we had that choice because we built business credit. And this is exactly why you want to make sure you do the same. Now, credit line hybrid is another no-brainer because it's credit lines that you have there available for the times that you need them most. Look, the biggest credit line we relied on to get us through COVID was using this program. We obtained it with credit line hybrid. So we need to have 700 type FICO scores. You or a guarantor, it could be a family member, a friend, investor, somebody else could pledge their credit as collateral. If you don't want to do your own, yours isn't good enough. But again, the nice thing is by tapping into this program, we get money at 0%. We get upwards of 50, 100, 150,000 in real usable credit. It's no doc. There's no income verification. We can take the cash out of the credit lines at 0%. So if we want to take advantage of the falling real estate market, we can get in and buy properties, for example. And the nice thing is a lot of this reports to the business credit reporting agencies. So not only do we have real usable credit lines, but we're building business credit at exactly the same time. And again, having an extra 150,000 in real usable credit lines on top of vendor credit really prepares us. Now we're getting into hundreds of thousands of dollars in potential funding. Now, we really want to focus on funding growth now. We want to act while the economy is still, okay, right? So an extra vehicle, we want to hire a location, a product line obtained now can pay dividends later. So again, the nice thing is interest rates are going up. So we have a chance to get in and get the stuff we need now before interest rates go up to be better prepared. Now, again, we don't want to stock up just to stock up. We may want to, again, predict what the likelihood that something may happen and get what we need now to deal with that. Maybe we think that usually if the economy is not good, our business will go down. We'll see less revenue. Well, then maybe there are things we need to be buying now to prepare for that. or maybe we expect that our business will go up and we need to actually stock up on things to anticipate the increase in business. Think about all the people that sold masks during COVID that weren't prepared. They didn't have the materials, they didn't have what they needed, and they lost an opportunity while all these new players that produced other things in their factories switched to masks, and all of a sudden they're taking advantage of the opportunity. That is the key. In every changing economic climate, people win and people lose. We don't want to be on the losing side. We want to be on the winning side. Every time post, the actual, mortgage crisis, post the COVID, we come out and we see these really smart people that did really smart things, that took advantage of opportunities and took their business to a whole new level. And then we see people that didn't and they went out of business. They're no longer around. I'm sure you, like me, can talk about maybe a restaurant you really love that's no longer around because they weren't properly prepared. I can tell you about 3 of them in Tampa that I love that are no longer here, but yet others really thrived. They created a whole takeout business they didn't have before. Now they're seeing revenues 50% or 100% higher than they have because they were prepared to take advantage of the opportunity. They added a whole new area to their business. A buddy of mine owns a martial arts studio, closed down during COVID, launched an online curriculum. Now he still does that now. Now he's expanding his businesses now that the pandemic is past, and he's got a whole online curriculum that he didn't have before. A lot of businesses take advantage of these opportunities, but it takes money to be able to. By the way, he used Credit Line Hybrid to fund that online e-commerce business, the same as he's using it to fund the expansions now. He had the money to take advantage of the opportunity, right? So there's a lot of things. Maybe it's equipment, maybe it's inventory that you can get now to be prepared when you actually see that change in the economy that we're probably going to see. Now, and Dennis says, what's the best credit card for balance transfer? It depends. There's so many factors there. And if you go to youtube.com/credit suite and just search credit cards, you'll find a lot of different training on that. The reason I say this is that it depends on what you spend money for. There are credit cards that give you 4 times the points on office supplies. There are ones that give you 5 times the rewards if you're actually buying gas. There's ones that give you 3 times to 5 times the rewards if you're buying groceries. So every card has a different benefit depending on what you're looking for. You're looking for travel rewards. You're looking for hotel points. You're looking for airline points. Okay. A good friend of mine says, I got 250,000 points with Amex. I'm saving it because I want to move it around and do the right transfers to get the most points on hotels and air travel. So again, there's so many different options, but youtube.com/credit suite will help you figure out the right card depending on the variables that you want. Is cash back important to you? Are points important to you? These are the things, Dennis, that we really have to figure out first. So you want to get yourself an array of business credit lines at the same time, right? So we want to make sure that we have available credit because we can reuse it and we only pay interest on what we're actually using. So we talked about Credit Line Hybrid, 150,000 up to 0%, 6 to 18 months. But there's also SBA credit lines. They have about 5 of them that are good. We've got Fundbox, we've got Blue Vine, we've got credit lines that are just for the purchase of e-commerce inventory you may sell online. It doesn't matter which credit line you get. You want to have all the revolving credit you can because you only make payments on what you use. And this is what helps you be prepared for financial uncertainty. Now, here's some financing growth hacks. You want to hire key team members when the opportunity presents. When other people are laying off, it gives you a heck of an opportunity, right? Okay, one of our biggest management companies in the country bought a lot of their inventory during the 2008 mortgage crisis. Everybody else sold, prices plummeted, and somebody else is buying up all that inventory, expanding their rental business. So it's the same thing when other people, they're laying off staff, and it gives you the opportunity to hire key employees for a fraction of what you would have spent when the economy is good, but only if you're financially prepared. Maybe you want to add new products or services to fill the void of other people pulling out of the market. Okay, but again, it takes money to be prepared to be able to do this. Maybe you want to acquire competitors. This is a really big opportunity. There's a lot of fire sales, which means businesses sell way below value when times are tough. Because look, let's be honest, running a business when money's pouring in and everything is great is fun. And when it's not fun is when you're losing money, when you're not sure you're going to be able to meet payroll, when you don't even want to look at your bank balance because it may be negative. So there's a lot of people but do not want to be in business when times are slow. And I look at a lot of businesses for sale. I'm the biggest trainer of people that go and acquire businesses. And I can tell you that I see more and more business owners when the economy shifts say the reason for them wanting to sell is the fact that they just don't want to do it anymore. They're just tired. They're exhausted. They want to retire. They love it when things are up, but when things go down and get hard again, they just don't want to do it. They're at the end. So there's all these opportunities to acquire competitors or acquire people in your supply chain. So, for example, maybe you're a soft drink manufacturer, but you don't bottle your own drinks. Well, then you have a chance during a rough time to be able to come in and buy somebody that does handle the bottling. And that's probably not your industry, but whatever industry you're in, there are products and services that are needed to deliver whatever it is that you are selling, and there's chances to buy people that are in your chain of the creation of those products and services that help you increase your margins, as well as competitors that you could potentially purchase. Okay, maybe you want to open a new location. Again, that's what exactly happened to my buddy. He owned a few martial arts studios. COVID hit, shut them all down. He went online. His competitors went out of business. So then they gave him a chance to take over those locations or open his franchise in their locations where they once were, because now that market is looking for an answer in martial arts because the competitor that was there isn't there. So again, the nice thing about all of this is that in every shift of the economy, there are really significant opportunities. You know it, and I do it, right? All of us hear the time about the guy that spent $100 on Bitcoin and now it's worth thousands, right? Or, now we see somebody that came in and bought properties during the 2008 mortgage crisis when everybody else was failing. They're getting mass amounts of real estate. Other people during COVID are in buying up restaurants and expanding their empire because restaurant owners are willing to sell for pennies because they don't even know if they're ever going to be able to open back up again. I can go on and on and on, but the bottom line is whenever we see this uncertainty, whenever we see shifts, we see massive opportunities for those of us that are prepared. And that really is the question. Are you financially prepared? Are you sitting on tens or hundreds of thousands of available credit that you're able to use to take advantage of these opportunities? If not, then you're going to be the one looking at the success stories in the years to come and go, man, if I was prepared, I could have done A, B, C, D. Or you could see 200, 300, 500% growth if you are prepared to take advantage of these opportunities. So if you're interested in talking more about the money you can get right now, including the optimal path to getting financing and being able to get credit line hybrid, build business credit, we'll definitely consult with you for free. The finance assessment we give you talks to you about all the money you can get right now, and we give you tips and tactics to build your business credit as well. You can get it at creditsuite.com/console. If you got value from this training, make sure you like and subscribe. And also go to creditsuite.com/toolbox. I have a gift basket of about $400 worth of goodies right here, all dedicated to helping you get money to grow your business. And all that you need to grab the nearly $400 worth of stuff is share our next live stream. All the details you need are at creditsuite.com/toolbox. And don't forget, you can also take a screenshot of this and email and call us for your free finance assessment as well. It costs you nothing. And within minutes, you know exactly the kind of money you can get now. And we start formulating the plan that you need to be able to get you the money, to be able to survive the unexpected, right? To be able to get through the uncertainty and to be prepared to take advantage of opportunities and grow and scale to a whole new level instead of just trying to figure out how to not be one of those failure statistics that we all try to avoid. So again, let's get you the money you need to thrive during all this. Give us a call, send us an email for that free finance assessment. So thank you very much for tuning in. Don't forget to like and subscribe and keep your eye out for our next trading. We talk about more cool ways to get the money you need to start and grow